Okay, so welcome to our trading session today. We're going to go through from real basics to then implementing our trades. So let's get straight into it. So the first thing we're looking at here is we are exchanging currencies. Okay, so we're exchanging one currency for the next. I'm going to flick my screen over here to the Euro, Great British Pound. And I'm currently on Trading View. Okay. Now, just to keep it really basic with you, what we do is we mark up the charts on Trading View and we trade from our devices on MetaTrader 5. Okay. It is wise to mark up your charts on Trading View, but you always want to trade from your mobile phone, your device, okay? And that would be the app MetaTrader 5. So what we're doing is we're going to analyze the charts, and then we'll be able to take those trades that we analyze and place them on our phones, on our devices, right? Now, you can be trading on a demo account, which means there's no risk at all. You're not risking any of your money. You're not risking any funds. It's I'd say you like to call it computer money, but it's the real live market given demo money that you'll be able to play around with. You can also trade with your own live money. So this is where you can upload some money into your broker account, and you'll £100, £200, whatever, and then you connect that to your MetaTrader 5, and now you're trading live money. Or you can trade our assimilation account, which is a funded assimilation account starting from 10,000 up to 500,000 that you'll be able to trade with as well. So depending on what account you're trading in will also depend on the risk that you're going to take. And we're going to have a look at different risk levels as well on today's session. All right. The main thing that we want to make sure that we understand and take away from this session is number one, what are we trading? Number two, how are we implementing those trades? Number three, what is the risk associated? When do we enter a trade? When do we not enter a trade? How much do we risk before we get into that trade? And when do we get out of a trade? How do we know when the trade is enough? At what point do we just say, okay, get out? And at what point do we close out in profits? If you've ever traded before, let me know in the chat and just say yes. If you've ever closed out a trade too early, you've closed out the trade, you've panicked, and then you saw it's actually gone where where you predicted it to go in the first place, but you closed out too early. Or we have some other persons that are in a trade and they stay in a losing trade too long. Okay, and then you're in losing trades too long, and then you stay in that trade longer than you should. Maybe you amend your stop loss, maybe your stop loss was too big. And we want to avoid doing things like that. Okay, so we're going to have a look at those things as well. So it's really about, rule number one, and we'll look at all the rules as well. But rule number one we know is about mindset, having a militant mindset. And it doesn't matter how long you've traded for or how many years, months, decades you've been trading, it never gets boring to hear this, because you need it in every single stage of your trading journey is mindset. You must get the mindset right. There's a reason why we put music on at the beginning and different mindsets at the beginning of our sessions, because we want to clear distractions. You want to be trading in the right mindset. You don't want to be thinking about anything else. This is not the time to write a shopping list, be distracted, multitask. You want to clear your mind so that you're focused for the time that you're trading on these markets. Now, as you know, it takes a minute or so to place a trade, but it also takes less than a minute to place it in the wrong direction or to make a mistake. So we must make sure our mindset is correct. If you've just had an argument with your spouse and you're heated, or you're frustrated at work, it may not be the best time to be placing trades. If you are desperate for money, chasing the trades, it's not a good time to be trading. Okay, you've got to trade in peace. Okay, profits like peace. I want you to write that down. Profits like peace. If you're chasing the market, if you're revenge trading, jumping in, doing buys, doing sells, you are going to lose money, and you'll lose it fast, right? So it's so important to make sure that the mindset of your decision making is peaceful. Got to have peace, and you must have a set of rules that you work by. And we're going to talk about some of those on today's call. I'm going to give you some extra sauce that you can go away with, that you can really start to really help yourself. So what are we trading? This is not the stock market where we need the market to go up. Okay. We don't care if the market goes up or down. Our jobs is to predict, is it going up or is it going down? As long as we predict the right direction, we make money. If we predict the wrong direction, we'll lose money, right? So the main thing is to predict the direction that the market is going. Is it going up or is it going down? That is as simple as it gets. Now here we've got the screen up, euro to the Great British pound. That means we are exchanging the euro for the pound. Now our job is to decide, is the euro getting stronger in this moment or is the Great British pound getting stronger in this moment? Depending on the direction that we believe is stronger will depend if we do a buy or a sell. Now, this is not, as I said, the stock market where the market has to go up in order to make money. We don't care which direction the market goes. It can go up or down. We just have to predict. Buy means we're predicting the market goes up. Sell means we're predicting the market goes down. That is as simple as it is. Now, when we're looking at getting into the trade, we need to look at our entries, right? Now, where we enter the market is just as important, if not more important, than where we exit the market, right? So we want to enter the market, okay? When the market is low, we want to enter a buy. And when the market's high, we want to enter a sell, right? So if I'm going to get my arrow here, okay, and I'm looking at this line right here, at this line, can we all see at this point, every time this market has hit this line, and I'm going to change this line to make it blue just so we can see, the market goes down. I want you to type down inside the chat if you see that. Every time this market has touched this blue line, I mean, it's spiked up a little bit, but then after that, it's gone down. So we're seeing that at this point, it seems to be an area where the market goes down. So if we were looking at this from a technical analysis, all right, position, we would say when the market hits this level, we would do a sell. Now, looking at this market right here, we can see that every time it's hit this blue line, albeit it might have shot up here maybe, but ultimately it's come back down, and it's come back down at least to this black line. Type black in the chat if you can see that the market has come back and it's touched this black line, okay? And I'm being very, very simple with my language to make sure that we can all understand this. I'm not going to be using jargon on this call. I'm not going to be saying, support resistance and all of those, words. I want to keep it very simple so that we can see the patterns in the marketplace. Our job is to see the patterns in the marketplace. Yes, we want to keep it super simple. I want to kiss you guys today, okay? So every time the market has hit this blue line, it seems to have come down to this black line, okay? So I want this market to hit this blue line again, and guess what I'm going to do? I'm going to predict it's going to go down, which means I'm going to sell on that blue line. Now, when I press sell on my MetaTrader 5, I will now enter into the market. Now, mindset, psychology. Every time you enter into a trade, it is almost certainly going to be red at first. Blue means you're in profit, red means you're at loss. Now, when you enter the market, instantly it's going to be at a loss because it is going to equate for what we call spreads or broker fees. Okay, the broker charges a spread which comes out of your profit before you go into profit. Put a yes if that makes sense. So you are going to be red at first until it gets down a little bit, right? Now, when it gets down a little bit, it then becomes profitable. Now, once you get down, you'll see the numbers on your MetaTrader 5, and you'll see that begins to turn blue. When it turns blue, that is your profit. You can manually close out that trade at any time you like in profit, or if you are busy and you're not staring at your phone, you can set it to cut you out when it hits this black line. Okay, and all you're doing is copying the numbers from the chart into your MetaTrader 5. Okay, now this blue line is what we call the entry. Okay, and then the black line would be our take profit. All right, very, very simple and basic stuff. Okay, so we're entering in the market here and we're taking our profit here. Perfect. And we are predicting that the euro against the Great British Pound is going to go down. Now, let's say, for example, on this occasion, it didn't do what it's naturally done many times before and come down. Let's say it's gone up. We now start to be in a loss and we see our account going in a loss. Now, we are going to implement a third line, and this third line is what we call a stop loss. Now, the stop loss is to prevent us going into too much of a loss before we cut out of the trade. Okay, so we make that red because that's going to be our bow out. We're going to bow out of the trade, basically. We're going to say, look, this trade has gone too far. I'm done. So because we see here that the spike has come up here and come back down, we're going to put the stop loss just a little bit above that, okay, because we're going to give the trade room. It might pull up a little bit, but then eventually we want it to follow this pattern and come back down. Type 7 in the chat if you see that. Now, hear me, we wouldn't put the stop loss here. Why? Because it's come up here before and come down. We want to be around here, which allows that trade to move, okay, and give us that space. All right, and we have here stop loss. Okay, so how much would we make on this trade? How much would we lose? It all depends on how much we're putting on per trade. So the lowest you can put on any trade is 0.01, which equates to 10 pennies. Okay, so 10 pennies is the least or the lowest amount that you could put on a trade. All right, and I want everyone to write 10p inside the chat. Excellent. So let's say we've put 10p on this trade here on the entry, and we've come out on the take profit. All right, so on 10p, we're going to make £4.20. Okay, and I want everyone to type that in the chat, £4.20. So on 10p, if the market did what we wanted it to do, we've come from here and we've come down here, we would have made on that 10p £4.20. Now, if we were trading a pound, that would have been £40.20. If we were trading £10, that would have been £420. Okay, so depending on how much you put down on that trade will depend on how much you make. Very simple stuff. Now, if the trade went the wrong way, how much are we risking? Now, on 10p, we've not done the same amount as the take profit because we want to risk a little bit less, all right? So on 10p, we would have lost £3.10, okay? So on here, we've got £3.10 as a stop loss, okay? So I'm risking £3.10 in order to make £4.20, okay? Now, we have something called a take profit 2. Now, take profit 2 is for those of you that understand trading that little bit more and you understand the patterns and you've looked at it and said, actually, I am happy to take that little bit more risk and go for a slightly bigger trade. Okay. So now instead of going to take profit 1, we're now looking at take profit 2. Now, why have I put this line here? If I zoom in, I can see that a lot of the time, not 100% of the time, but a lot of the time when the market has come down, it's come down to this zone as well. Okay. Someone type zones inside the chat. We're looking for patterns. We're looking at the zones. So I've now put a TP2 in. So instead of taking my profit at TP1, I can actually hold out and stay in that trade till TP2. And I could also have a TP3 and a TP4. Okay. And depending on the risk that you want to take will also depend on the reward in which you make, right? TP3, and I've just marked out here TP4. Okay, excellent. So we have our entry, we have 4 take profits, we even actually have a 5th one here. I'm going to amend that to TP5. All right, and depending on how long we want to be in this trade will depend on how much we make. So let's say we stayed in all the way to TP5, that 10p would have made us £10.20. Okay, with the same stop loss, we're risking £3. Okay, so wouldn't that be a great trade? Risk £3 to make 10, or risk £30 to make 100, risk 300 to make 1,000. Put I in the chat if that makes sense, right? So our risk to reward is very important. Now, I've got a question for you, and I'd love for you to answer me about this question that I have. Okay, what if I decided to make my stop loss all the way up here? Would that be a wise move, do you think? Giving it that much room to avoid having a loss, do you think that would be a great move to move that stop loss all the way up here? So I'm now risking £15.60, and especially if I only go to TP1 in order to make £4. How many of you think that's a good risk to reward, right? Does it make sense to risk £15 to make 4? And believe it or not, that's how a lot of non-profitable traders trade, right? It's crazy. We got to get happy and okay with protecting our accounts, right? So just a quick reminder, when we're trading, we're not trading from our bank accounts, we are trading from our trade account. So you would have uploaded some money onto your trade account. Okay, let's say for example, you uploaded £200 on your trade account and you're trading, you would not want to risk that whole £200 on one trade, would you? Because then if that trade was lost, you now have to go and put more money in. But if you risked £15 and you lost that trade, your 200 is now 175. Okay, are you happy? 185. Are you happy with that? Would you cry if you lost one trade? Okay, no, because you still have more money to trade with. And I want you to write this down. I am trading another day. A lot of the times we want to trade for the moment, but your goal is to trade another day. Okay, I will trade another day. If you have money in your trade account, you can trade another day. We must not get caught up in a loss or two. The only time you get caught up in a loss is if you've over leveraged and your stop loss is all the way up there and you've lost lost more than you really should have. Okay, we must have the mindset of I am trading another day. Now we're going to go over to gold. Okay, and we're going to do exactly the same thing. Now, a lot of people ask me, Nikki, can you show me how to mark up the charts, right? And the truth is, it took me at least 7 months to learn how to mark up the charts. And then it took me another 2 years to really practice, my strategy and to be comfortable taking my own trades. Now, one of the things I can tell you for sure is this. You want to back test. Whenever you're taking your own trades, you want to back test for at least 90 days. I would normally say 6 months, but 90 days of back testing so you can actually see when you trade well, when you've made losses, the reasons why you've made losses. If you are taking your own trades, I'm not talking about trades from an expert or trades from our group or trades from the scanner. I'm talking about if you are predicting your own trades and you haven't back tested over a 3 month to 6 month period, That is financial suicide. I want you to imagine a surgeon going in to perform heart surgery and they have not tested whether they know what they're doing or not. How many of you would be happy for that heart surgeon to perform surgery on you? We wouldn't. Okay? No other industry will allow a novice into a position of high impact like that, but yet we do it in the markets every single day. Now this market is a $7 trillion a day market. It has the power to pay us every single day. Why wouldn't we take it as seriously as a heart surgeon doing surgery? So I'm going to show you what to do, and I'm going to give you the first bit of homework is for you to back test this for a 90-day period. If you're serious, 6 months. Practice marking up the charts, practice lining up your eye with entries and exits, and also practice looking at when you actually lost a trade, when you won a trade, and to figure out why. If you can do that for a 90-day period, you'll be unstoppable. And those of you that are, my one-to-one students, you already know I literally give you 2 or 3 free strategies that you can do and implement. And we've seen some massive results about that. But I'm going to show you guys something today that anybody can do this. Like anyone can literally do it, and you'll be able to start taking trades, just basic, market structure, but it will enable you to look at the market from a different perspective and be able to take trades. How many of you want that? Let me know. So rule number 1 is mindset. We want to make sure our mind is in the right place. We want to make sure that we are looking at the market from not an emotional position, but we're looking at the market from a place of strategy and rules. Okay. We're going to look at it and create our rules so that we know we're not entering a trade if XYZ is happening. We will enter a trade if XYZ is happening. So first rule we know, mindset. Second rule, forexfactory.com. Okay. Every single one of us should be checking forexfactory.com, making sure we're looking at the date. Make sure the date and the time for your time zone, your country is correct. Okay. Very, very important that you have that set. All right. So in the UK right now, it is 11:31 p.m. Okay. And if you have a look here, it tells us practically it's almost Monday. So we're looking at Monday if there's any high impact news that could affect the markets. Okay. Now, high impact news, you'll be able to see with a red folder. So I'm going to flick to Tuesday and I'm going to see if I can find any high impact news, right? Can you see here? So there's none for Monday, but Tuesday, we can see that there are 2 red folders at 1:30 p.m. UK time. Okay, so that tells me at 1:30 p.m. UK time, there is going to be some crazy news that happens around the United States dollar that could impact the usual pattern in the marketplace. So although we are going to mark up the chart and we're going to look at a pattern and we're going to see what normally happens at 1:30 on Tuesday, this news could disrupt the normal pattern of the market, which means we don't want to be placing trades during this time. Now, there are strategies that you can trade these red folders. We're not going to go there today, but the general rule is do not trade when the red folders are alive. In fact, you want to give it at least an hour before and an hour after to let the market breathe. Okay, so red folders, avoid. And I want everyone to write avoid. Okay, write down avoid the red folders. But back to today, we're looking at the market. We can see that there's no red folders, so we are good to go, right? We always want to check the red folders before entering any trades. Now, when we're looking at gold against the United States dollar, so this is XAU USD, we know that Tuesday at 1:30, this very market that we're marking up, we want to avoid it at 1:30 because there could be some serious volatility. So before the market opens, in about 20 minutes. Let's mark this up so we're ready to take a trade once the market bell opens. Okay, so I am starting on the day chart. Okay, this is how I mark up my charts, and I have done for the last, at least since 2018. Okay, I have marked my charts up like this, and it hasn't taken me wrong, right? Some people don't do it like that, and that's absolutely fine. But this is the way I can only show you what I've done and how it's worked for me. Okay, and I have a system that I use, okay, to enable me not to make mistakes. And it may seem monotonous, but if you have a system and you follow that system, it means that you can avoid missing things and you can avoid making mistakes. Okay, so I have a top to bottom system. All right, now the top to bottom system very easily says this: what is the highest point in the market that you can see right now? And put that bad boy right there. The highest point in the market that I can see. Okay, and it doesn't require me to open it up or anything like that. I'm just going to look at what I can see right now. And what's the lowest point that I can see? Now, straight away, what have I done? I've created a zone. So now this is the zone that I'm looking at. I'm then going to go on my chart again, and I'm going to look for where I can see at least 2 candles, the body, not the wick. Okay, now the wick is the thin line here, the body is the fat bits. All right, so I'm looking for where at least 2 candles are touching on the wick, on the body at the top, and then I'm going to do the same at the bottom. Boom. Okay, so I'm going top to bottom. My goal is to get in the middle as close as I can. I'm going to do the same again at the top. Where can I find at least 2 bodies? Boom. Right, and then at the bottom, where can I find at least 2 bodies? Okay, and I'm going to go here. And again, I'm looking for at least 2 more, and I might say here, and I'm going to look for another 2 more here. Boom. And I see 1 more here. Boom and boom. Okay, so I have now done my top to bottom analysis, and I'm going top, bottom, top, bottom, top, bottom until I get right into the middle. Now I've charted up my day chart, and this is giving me an overview of what's been happening over the last few months. Okay, because each candlestick here represents a day. Okay, so we're looking at a monthly analysis. Is going back, if we go back here, this is December 2025, right? So we can see up to here. Now, what I'm looking at is the trend, and normally I do the trend line first, right? So I can see here that it is a downward trend, okay? Because I'm seeing from left to right, the market is higher and then goes lower. And I can see the different zones that the market has moved in. Now, that's a high level analysis. I want to go a little deeper. So I'm going to go now to the 1 hour chart. Now, when I go to the 1 hour chart, you can see my lines from the day chart has come through. But now I want to do exactly the same thing again and get a little bit deeper into these markets. Okay. So I'm going to put in my trend line. So I can see here again, right? And it doesn't have to be exactly perfect, but you get the drift. Again, it's a downward trend. So it's a downward trend on the day chart, downward trend on the hour chart, right? And I'm now going to start putting in my support and resistance lines, which for the purpose of this, we're calling them tops and bottoms. And again, I'm only concerned about the zone that I'm looking at. I don't want to be zooming out anymore else. So where is the market at the top? And just for this, I'm going to change this to blue so we can see it. Okay, so we can see the difference between the day and the hour. Okay, so our blue is now the hour. So we've got the blue here at the top. And what am I seeing at the bottom? The wick to wick is right there. Then I'm going to go for body again. Boom. And body again, boom. And we're going to keep doing that until we get to the middle. Okay, boom. Right, we've even got one more, maybe here. Okay, so put yes, yes in the chat if you're seeing that, right? So now I've actually started to see what's happening hour by hour because each candle is now representing an hour. So boom, we've got 1 hour, 1 hour, 1 hour. We can see here what's gone on. We can see there's a big drop here down to this point. But overall, we can see that this market has been doing a lot of that. We can now start to see the pattern in the marketplace, right? So I'm looking at this pattern and I'm like, okay, cool. Every time it's hit this line, and I'm going to turn this into gold just so we can see this. Every time it's hit our gold line, yes, it's risen a little bit, but ultimately it's fallen. Every time it's hit this gold line, it also has fallen. Okay, so these two zones seem to be very popular in the streets of gold. Every time it's hit this line, I'm going to turn it to purple, the market seems to have gone up. Can you guys see that? Right? Just type up in the chat if you can see. Every time it's hit this purple line, it has come up. It's either come up here, it's either come up here, or it's gone back to our gold line. When you start to look for the patterns, you'll start to see the patterns, right? We can see that here. So our purple line seems to shoot it up. However, this time it actually broke that and has fallen down. So this is now what we call a break of structure. Okay, so it's hit here multiple times, pushed up, it's come back down. We're expecting it to push up, but actually it broke the structure. I want you to write that down. A break of structure suggests a change in direction. Okay, so we could now be looking at selling instead of buying. Where would we sell though? We would sell on this purple line because now instead of this line being a buying line, it has now become a selling line. So what do we want when the market comes back to us? We want it to come up here and then we would sell back down here. Now, those of you know that gold is very volatile and pays more. Okay, so let's have a look. If we had this as our entry, okay, and this is just one setup, we'll have multiple. Okay, if this is our entry and this is our take profit, how much would we make on this? So with the volatility of gold just on 10p, this is £48. How many of you like gold? Say gold, right? This is now a £48 trade. All right, now we enter in on this purple line and we come out on the black line as a sell. Okay, that is now a 48 pounder on just 10 pennies. Okay, if we stayed into the blue line down below, that brings that 10 pennies from £48 to £61. Okay, so not a bad trade at all if we get the risk right. Now, the difference between most of the currencies and gold is that gold is volatile. You guys can see how this has been all spiky, it's jumped up, right? And every time the market has done that, it's all over the place. So with gold, the rule of thumb is usually just above the previous 50 pip spike. Now, what does that mean? That means if we go to the left a little bit, 50, and we'll do another session on calculating, you know, how you calculate your pips and stop losses, etc. Even though the scanner does show you that, I'm excited for you all to have access to that. But if you have a look here, our entry, and I want everyone to write this down, is 4705. Okay, 4705.80 is our entry. Now, when we're working out the stop losses and take profits, etc., just ignore the numbers after the decimal point. So for now, we're just looking at 4705. Okay, so 4705 is where we're looking at our entry. Now, if we're to follow the rule of thumb, which is 50 pips, okay, I'm just going to open this so you guys can see. If we're to follow the rule of thumb, which is 50 pips, is everyone typing 4705? Let me just make sure my chat box is right, then 50 pips on 4705 is 4710, okay? So when you're calculating pips on gold, you're just adding 5, even though it's 50, okay? So the stop loss would be 4710. Now, we put that in here, 4710, and then we re-add the decimal point, so 4710.80, okay? So we'll put that there. Now, you and I, we're now going to go down to the 15-minute chart to really assess what we're looking at here, okay? Now, how many of you know that that stop loss is too small, okay? It's too small. We would get stopped out. So the rule is we're going to look for, okay, look, we're right through all of the madness that normally goes on with gold. So what we're now going to look for is a zone a little bit higher, but just above where the madness normally goes on. Now, you might not be able to see this. I'm going to zoom in a bit, but I've chosen to look at this candle right here, this red one, and I'm looking at this red and green one right here. I'm going to zoom in so you can see where they end. And where they end, I've decided to put my stop loss just slightly above, okay? So I'm looking within to see where the market, all right, where the market has stopped previously. I'm not going to follow all of these big ones because otherwise the stop loss is going to be way too big. We'd end up all the way up here, which is crazy, right? We've already established that's crazy. So instead of it being 4710, we've gone to 4716, okay? So on 10 pennies, how much am I risking? Okay, I'm now risking £10, okay? So on 10 pennies, I'm risking £10. Am I still happy with that? Let me know in the chat, yes or no. If I'm risking £10 to make 49. Let me know in the chat if you are okay with that, okay? So for me, I'm happy to risk £10 in order to make 49. If I moved it slightly, and I have seen some people do this, move it slightly above the noise, which is up here, this is now 4734. So this is like a 300 pip stop loss. For me, that is too big. And now you're still risking 28 to make 49. Okay, so it's still pretty okay. It's 28 pounds to make 49. So, you know, you're looking at a 2-for-1 there, which is still okay. But for me, that risk is just too big for no reason. But again, if the numbers make sense, then it makes sense and you'd be risking 28 there. Or if you wanted to be a little bit more safer, as I said, we'll keep it down just above here, which is the 4716 mark. All right. So how do you know whether you're going to get in a trade? If you see that it's so busy that you can't determine your stop loss, and in order for you to determine your stop loss, it's got to be all the way up here, and you're not comfortable with that, that's when you say, do you know what, this isn't a trade I want to get into. Okay, so you've got to be comfortable with the risk before you enter the trade to know whether you're willing to get into that trade or not. Okay, now just because of time, I don't have time to go into a whole the 15-minute strategy and what you look out for at 15 minutes and how you get a sniper entry. All of that is done in the one-to-ones with me, but just on this alone, you can now look at this and you can say, right, I can see the support level, I can see exactly where I'm going to get in. I'm going to get in on this entry zone, and I am going to have patience because I know most of the time when it hits that purple line, most of the time this market goes down. Yes or yes? If you're looking at a chart and you see that, guess what? I see there's a break in structure. I'm confident because when I see the previous break in structure, it came down to the black line, it came down to the blue line. It even, and this is where we can add a few more take profits, it even came here. It's going to tell a story for you, right? You always got to tell yourself a story, okay? It came down here. Looking at the previous structure, it even came down here, and it came down here, and it even came down here, right? So now I'm saying to myself, I potentially am seeing the pattern, right? I'm seeing exactly what's happened before because the last time it broke structure, it went way down here. So now I'm seeing it potentially break structure again. I am looking at this. Now, how many of you wouldn't mind just 10p on this? This now becomes £149 on 10p. On a pound, that is 1,400. And on £10, that's £14,000, 900. Hello, somebody. Now, here's the question. How many of you would be comfortable and confident to close your phone and say, do you know what? I'm going to trust my market structure and the pattern. I'm going to leave it. I'm going to let it rock. Now, how long did it take the last time it broke the structure? Well, let's have a look. We're looking back at the 1 hour chart. It took 5 hours to go from our purple line down to our green line. How many of you have the patience to say, do you know what? Let me leave it and let it do its job. Let me leave it and let me make that £1,400 and leave it. Or are you the person that sits there opening trades, closing trades, opening trades, closing trades, opening trades, closing trades, opening trades, closing trades? You've given so much money to that broker by opening and closing trades and giving yourself panic attacks for no reason. Could you set it and forget it? Could you look at the charts and be able to say, I am confident that this bad boy is going to come down here? Because I've seen it happen before. Every time it's broken structure, look, we can go back. Broken structure, boom, it's hit there. Broken structure, boom, it's hit there. Every single time it's broken a structure, it has come down and hit your TP6 line. Every time. Now, when you get the trade from the Discord group, when you get the trade coming from the community or the scanner, do you plot it on the chart and look at it yourself? After you've plot that trade or put that trade in? Are you looking at it like that so that you can actually take an overview and you can make a real decision on when to close your trade out? Or are you simply just panic trading? Oh, let me close it. Loss. You've got a loss on a lack mindset that you're panicking like, oh, do you know what? Let me just close it. Let me just close it. When you see the trade going red, you panic, you close it. When it's blue for too long, it's like you're allergic for it to stay blue for too long. You're like, oh, let me just close it. Let me just close. Where are you going to have peace? Do you have peace when it's blue? Or do you have peace when it's red? Because even when it's blue, y'all are still closing the trades. So you want to get to a place where you say to yourself, do you know what? I'm looking at this. Most of the time it comes down to 6. I'm going to be at peace just staying at 4. But I'm just going to let my thing hit. I'm going to let it hit at 4 and I'm going to be good. Right? So we're waiting for this market to open in 7 minutes and we want to see, should she pull back and hit our purple line? Boom, we can take an entry. Right? Now, should she carry on coming down? If she comes down and carries on coming down, are we going to get in? No, because we want it to hit one of our entry zones, right? So if we see this market pull below our blue line and then come back to the black line, we can then take the sell. We always want the market to pass our entry and come back to it in order to take the sell, or we want it, if it's a buy, if it's the other way around, we want it to go below the buy and come back to the buy for us to take the buy. above the buy, come back down for us to take the buy. Okay, this is a strategy, and you can Google this on YouTube, called break and retest. Okay, it's very simple. You're looking for the break. All right, you're looking for the break. You want the market to break past the zone, come back to your entry, and then you take it. Okay, you shouldn't be gambling and you shouldn't be guessing. This is technical analysis, and we are professional traders. All right. And on that note, I do want to take some time to just celebrate. I know that we had Auntie Bev last week. I don't know if you all saw inside the chat. Auntie Bev, we want to officially and again celebrate you. You had a massive withdrawal last week, which is fantastic to see. And just well done for being disciplined, for really just staying focused. A couple of years ago, you made a withdrawal, bought your car, and now you just withdrew 5,530 from our funded assimilation account. So just well done, Auntie Bev. Shout out to all those that have also withdrawn as well. It's great to see. Angelina, we've seen absolutely incredible results. I don't want to be saying everybody's names on here, but just well done, everyone, for all the withdrawals. We have some people that are anonymously withdrawing. We had one of the biggest withdrawals we had for a very long time in a community, almost 100,000 withdrawal in a 2-week time frame. Persons wants to remain anonymous. You are on the call, so I just want to say congratulations and well done. And it is just great to see people that are finally being disciplined. Listen to me, I tell you this, it is, a bad workman always blames his tools. Don't be that person that says that it doesn't work. There's too many people winning for it not to work. If you're finding that your mindset is what's impacting your trades, you've got to look at your mindset. You've got to look at how you really prioritizing this skill. You've got to look at, are you panic trading? Are you somebody that's in and out of the market too soon? Are you expecting a payout without actually sowing the seeds required? My question is, when are you going to take it seriously, like really seriously? You gotta weigh up what you actually want from these markets so that you can set your expectations and your work ethic alongside that. This is a life-changing skill, so we've got to make sure we're sowing seeds that honor that, right? You cannot sow apple seeds and then when the tree bears apples be upset that you didn't get pears. The basic law to sowing and reaping, whatever we put in the ground, there is a harvest aligned to that. And so our mindsets, we must make sure our mindset is right. Okay. Another thing I'm going to share with you guys is this website here. Let me see if it will allow me to share. And this website is going to help you when you are looking at deciding what to trade. Okay, maybe you are not like me, that is in love with gold. Okay, maybe you may want to trade different currencies. You may want to be doing different types of currencies you may want to explore. So this website here, livecharts.co.uk, is a great website that you can check, and it's live and it's active. Livecharts.co.uk, and it's a currency strength meter. Those of you with access to our scanner, you know that the currency strength meter is incorporated in the scanner, so it's all there on one page for you to be able to see. But the currency strength meter, what it does is it allows you to see which currencies are strong and which currencies are weak. And what you want to do is you always want to pair a strong currency with a weaker currency. You never want to put two currencies of the same strength or close strength together, because you want that volatility, you want that movement. So, for example, we can see here the euro is extremely strong and the Japanese yen is extremely weak. So if we were looking for a trade today, which we will, Euro JPY could be a great place to start, right? And we know that the euro is extremely strong in compared to the Japanese yen. Likewise, we can see that Great British Pound is 4 bars and US dollar is 4 bars. So do we really want to be trading GU? Not really, because they're the same currency strength, right? So livecharts.co.uk, great resource that can, and every 5 minutes you can refresh it because it updates, okay? So you can see here the different currency strengths based on live time, okay? So it's livecharts.co.uk, and that will allow you to have a look at what currency is strong and what currency is not. And with that being said, we are in the live market right now. So I am going to just have a look at that. And then we can see if we can place some trades, okay? So let's see what we're looking at here. We can see that the market is now moving and we are in the live market. So as the market starts to move, I will open up for some questions in a moment, but I also want to encourage you all to make sure you understand your risk, okay? Understand your risk when you're placing trades, all right? Also understand that if you are trading a funded assimilation account, your risk is different to if you are trading your own, private money account. Now, the funded assimilation accounts you can withdraw every 2 weeks. Your own trading account you can withdraw every day. So I've said this before and I'll keep saying it, which is you want to make sure you have at least your own trade account, but you want both. Too many times we are dependent on the funded assimilation account and we forget that the key is your daily income. Your daily income from your daily trades is what is going to provide you with the stability to be able to live, to quit your jobs. Your funded assimilation accounts, those withdrawals are for your big spending. It's for your house deposits. It's for your, your new car. It shouldn't be for your day-to-day spending or your bills. You shouldn't be sitting down waiting every 2 weeks to pay your bills. Your day-to-day trade account, your everyday cash account should be a cash flow. And I want everyone to type in the chat cash flow, right? I want everyone to type in the chat cash flow, okay? Cash flow. This skill pays you every day, right? Funded assimilation accounts is going to pay you every 2 weeks. Your live account is going to pay you every single day. Get that into our brains. 2 different strategies, and I don't have time to go into financial literacy today. We may do that next week. But you have strategy number 1, which is to be able to withdraw every day. Strategy number 2 is to be able to have your big withdrawals, your deposits for your houses, your cars, your school fees for the kids. It shouldn't be, I can't eat bread until my 2 weeks money come. That's not how you want to live, right? And we got to get better at stewarding what it is that we are doing here, because if we mess up our own strategy, we're going to be disappointed, right? We're going to be highly disappointed. It's very important, very important. We want a daily cash flow from this thing. The market resets every day, 7 trillion. Why are you not making withdrawals every day, right? Why? Just saw a screenshot from our very own Tosin. Shout out to her. She's got her own account, not her simulation account, her own account. Big withdrawal, just withdrawn, right? Big withdrawal, her own account. You know why? It's discipline, it's focus. Okay, so I want us all to make sure that we're writing down this plan, right? Write this plan down. It's very simple. Big deposits, long-term goals, big dreams, funded assimilation account. Day-to-day lifestyle, day-to-day eating, day-to-day bills, your own personal trade account. And if you do it like that, you will never have an issue when it comes to stewardship and finance, okay? So let's have a quick look at Euro JPY, as we established that there could be some opportunity there. Okay, so remember, compared to the JPY, the euro, which is the first currency, was incredibly stronger, which would suggest, as euro is the first one and it was stronger, that we could be buying. Okay, so I'm just going to quickly mark this up so we can have a look. And we can potentially, and I'm just doing this on the hour, see where we can go. Let me just have a quick look at the day chart. Okay, so looking at Euro JPY, we can see the last time it hit up here, then it dropped down. Okay, it's hit here, right? So are we expecting it potentially to come up and hit there again? Could be. But look what happened when it hit there, it came all the way down. So for me personally, I want to see what's going to happen here. So if we have a look and see, we could potentially take that trade up to here, but it's on 10p, we're looking at 32. Let's see, 32 pounds. And where would my stop loss be for that? So this would be my entry here. Okay. Take profit 1. Take profit 2. And where would my stop loss be? Well, it's going to be under this wick here, which is around here. Am I happy with that? Let's have a look. Does it make sense? So for me, risking £28, someone tell me in the chat, risking 28 to make 15, is it a trade that is worth me entering? Risking 28 to make 15. Nah, it's not worth my risk. However, if I see it hit this level, which is where it's hit before, would it be worth my risk to sell down? Absolutely. So I'm gonna wait, and those of you in the community will see that trade as and when it gets to where it needs to be. In other news, let's get back to gold and let's see what's going on here. Okay. See if I can see. I've got quite a few gold charts. Just bear with me, people. Okay. So gold not really moving that much. We can see it's just still jamming here quite neatly. A little bit of a pull down, but we are not entering unless we see it break below this blue line or above the black line. But in the middle of this bit, we ain't doing nothing, because we know when it hits this blue line, it normally bounces off. So could we take a buy? Could we take a buy here? Could this be an entry? Yes. And where would we come up to? We potentially could come up to here. We can make this money both ways, technically, right? We could take the buy here. We could take the buy up to here. Okay. So, should we see it hit here? We can enter up TP1, 2, 3. Should we see it enter here? We can sell down TP1, 2, 3. Okay. And if we buy here, we want to have the stop loss just below these spikes right here. Let me know in the chat if this is helpful, right? So now you got it both ways, right? Let's see. Let's type helpful if this is helpful for you. All right, I will post this recording inside the community so you can watch it over and you can begin to practice. So homework number 2 is very simple. I want you to be screenshotting when you've done any trades or anything where you've utilized some of the information you've got here. I've kept it very basic and simple. Of course, there are levels and we'll keep on growing. But I want you to be able to see how simple this stuff is when you are at peace. Okay, so here's what we do. We now wait for the market to come to us. We don't chase the market. We're now very simple. We're very relaxed. We're looking at this market like, okay, touch one of my entries. And if it doesn't touch one of the entries, do we get into the trade? Let me know in the chat. If it doesn't touch our purple line entry or our blue line entry, do we get in the trade? Answer is no. Now, what we're also going to do is when we see our stop loss, we're going to work out with the stop loss, we're going to work out what risk we're going to put on that trade. Okay, so I know if this stop loss from here to here is on 10p, £22, and I've only got £100 in my trade account, that is what? 20%? Am I risking 20% on one trade? Some people may say, yeah, I'm willing to risk £22 if I've only got 100. Too big? Yeah, I'd think £22 on 100 is way too big. Because if I lose this trade 4 times, I'm finished. My account's blown. So if you only got £100 in your account, you ain't doing this trade. This trade is not for you. Because it is a risk on just 10p. On the lowest level, this is a £22 risk. Right? So this is where you have to look at the thing. You have to say, okay, from 4645 down to 4622, that is too big for my account. I cannot place this trade. Now, you might say, okay, well, if it's 4645, I'm going to go to 4633. Can I manage that? Let's have a look. On 10p, I'm now risking £11. How many of you are happy with £11? Okay, still 10%, but it's better than £22, right? So you also have to know how to work this thing out, right? You've got to know how to work this thing out so you're not over hemorrhaging, okay? You're not over hemorrhaging, right? So homework number 1 is to practice. When you see a trade come into the community, mark up the charts. Create a trading view. You only need a free one. You don't need to pay any subscriptions. Create a trading view, mark up the charts. If you have access to the scanner, you can mark up your charts inside the scanner, right? The scanner will even help you to be able to determine how much your risk is and work out all the numbers for you, okay? And once you mark it up, then you can say, okay, these are my entries, and unless it touches one of them, I'm not entering. And you can set your buy stop, sell limit, sell stop, buy stops. You don't have to sit there watching it. You can set pending orders, okay? But the key is you want to make sure that you are at peace when it comes to entering and closing trades. If it hasn't hit your stop loss, you don't need to panic. If you've worked out the stop loss and you've worked out when and how much you're willing to lose, you should be in that trade like, okay, cool. Let it hit the stop loss. Let it hit the stop loss. It's either going to hit my take profit or it's going to hit the stop loss. And I'm at peace with both. Okay? So very, very important that you have a mindset of I've worked out my risk and I am okay with the risk that I've worked out. So I have peace whichever way it goes. When you have that type of peace, you win more trades because you allow the trade to marinate and do what it needs to do. Okay. Very important work on a mindset. Very important, make sure you know your risk. Very important to check Forex Factory. Very important to make sure you have a plan. All right. Make sure you have a wealth plan. Make sure you go through your compound plans. Right. We've gone through that before. Okay. We may do that on next week's session, the compound plan and how to work it out. So the compound plan helps you every single day in your trading. Okay. But we'll do that next week. And I'll put a video in for you guys. All right. So let me stop here.